Welcome back. You're watching the ET Money Show on ET Now. And like we were talking about REITs, the term REITs has been buzzing off lately. And for that, let's know and talk to the expert. What does this term actually mean? And what, as an investor, should I be expecting in terms of returns? For that, I'm being joined by the founder director of Finsafe, Ms. Mrin Agarwal. Mrin, thank you so much for joining us today on ET Now. Before I come to you, let me just help my viewers with the full form of REITs, that is Real Estate Investment Trust. And as a layman, I can easily understand that it is something related to real estate. It is some sort of trust, a pool of funds where they can accumulate my money and they do invest in real estate. But as an investor, I would like to know, where do they actually invest my money and what kind of a return should I be expecting?
Hello, Shrishti. Nice to be on the show today. Well, as you said, it's like a mutual fund, which instead of holding securities, holds properties and properties in form of commercial real estate. So the rules are that 80% of the investments have to be in completed and income generating assets. The balance 20% can be in under construction properties. It could be as loans to real estate companies, or it could be in the money markets as well. Or it could also be in listed equity of real estate companies. Now, more importantly, REITs need to pay out 90% of the distributable cash flows on a regular basis. And how do investors invest in a REIT? Well, you buy it through your broking account through the stock exchange, and the minimum amount is 50,000 rupees.
Okay, absolutely get your point, Mrin. But what are the other options available that where, as an investor, I can go and invest in REITs? What are they?
Other options available. So at present, there are three REITs which are available in India. And I mean, unless there is an IPO, but these you can buy on an ongoing basis.
The minimum investment is around 50,000 of rupees, and there are three REITs that are available for investment in India. But going forward, Mrin, would like to know from you, what are the actual advantages that REIT as an investment hold for an investor? What's your outlook on this?
Well, firstly, when you invest through a REIT, it means that you need to have a lower capital allocation as buying a property on your own. There also, you get an exposure to commercial real estate, which a lot of individuals don't really get on their own. It's certainly more liquid than buying a property because you can sell it whenever you want to. And I think basically more stable cash flows on a regular basis because you're basically banking on the rental yield in the property. So I would say that it does have quite a few advantages versus investing in a real estate directly.
Absolutely, because buying a real estate property, not just in India, across the world, is can be a very hefty one. Not just 50,000, but like a lot of amount that it can cost us. But I'm really convinced about your advantages point. But on the flip side, what are the disadvantages of REIT? Are there any?
Well, I would say that right now REITs are still very nascent. The first REIT really came out in 2019, so they're pretty nascent, and we only have three REITs right now. It's been a very short period, so we are yet to see what could be the challenges that lie ahead. The other thing that I noticed when I was looking through the REIT documents was the fees that's being charged. There is a fund management charge. There's also a property management charge, and I think if I'm correct, then the charges work out to 2 to 3% per annum. So certainly much higher costs than what you would get in mutual funds.
Absolutely, like 2 to 3% is a bit of a cost when you're actually investing in REIT. But Rin, can you just highlight for our viewers what are the basic pointers that one should be looking out for before they consider and go for their investment in REITs?
Well, I think the first thing as a customer that you must figure out is what is your allocation to real estate. If you already hold, like, for example, 70-80% of your portfolio through real estate, then probably getting into commercial property again may not be a great idea, because what you do need to remember is that the entire real estate sector is really dependent upon how well we are doing as an economy, right? Now, specifically, when you're looking at REITs, the other thing that you have to keep in mind is that there's going to be this regular income coming in. So, do you need this regular income to come in? Or, do you prefer like a cumulative sort of an investment? So, I think these are two considerations when you're looking at it at an overall category level. Now, when you're looking and you're comparing the REITs, well, you need to look at what is the weighted average lease expiry period, which means that all the leases that are there, if you take the weighted average, what's the lease expiry? Typically, I've seen it's in the range of about 7 to 8 years, which is pretty good. What are the type of properties that are being held, right? Are they grade A commercial properties? What are the type of tenants? So again, are they MNC tenants? Typically, MNC clients tend to hold properties for longer term, have good lease terms, and are generally considered as good stable tenants to have for these property. What is the sort of occupancy rates? And certainly there was quite a bit of worry on the occupancy rates due to COVID and due to work from home. I think the occupancy rates have moved up to about 70%. And also, are they geographically concentrated in one city or in one region? So I think, these are things that investors need to look at. And there's enough material that's available online for them to actually read through and figure these important pieces out as well.
Yes, absolutely, Mrin. Thank you so much. That one has to go across all of these factors before they go for their investment decision. But Mrin, the next question is really important from the point of investors, because whenever I'm looking to allocate my money into some sort of an investment, not just in terms of return expectation, I would like to have some tax benefits on that. REIT as an instrument, do they offer any sort of a tax incentive on them? What's there for an investor?
Well, there are two ways in which you generate income in a REIT. The investor gets a return in a REIT. One is through the regular distribution, and other is through the appreciation in the price of the yields of the REIT. So, as I said, the REIT is basically listed on the stock exchanges, and so its price keeps moving up and down. So when the price moves, so the buying price and the selling price, whatever the difference is, of course, there's going to be capital gains applicable on that. The way the capital gains works is that it qualifies for long-term capital gains if you hold it for a period of 3 years. And then it is taxed as 10% after a gain of 1 lakh. And if you exit it before 3 years, it is taxed at a rate of 15%. So that's your capital gains. Now, the REIT will have income coming in three ways. One is through dividends distributed, which are tax-free in nature. The other is through interest income and rental income. Now, interest income and rental income is going to be taxed at slab. And if there is amortization of debt or repayment, that's again tax-free. So it's a little complicated for most investors to figure out if you want that one number at which the distribution is going to tax that, that's not very easy. You have to look at what is the overall distribution and what is the source of the distribution, and then accordingly it gets taxed. So I think the taxation is quite complicated on it.
Okay, but that was a very comprehensive way wherein you tried to actually help our viewers understand that what kind of a taxation one can be expecting out of REITs. But lastly, Mrin, from the investor's point of view, what kind of a return expectation should one be having from REITs? Because you were mentioning that it's not that old an instrument, especially in India. We just have very limited options right here. But till date, what kind of returns have these REITs given to the investors, and also adjusted to tax, what should one be expecting?
So I looked at the last financial year numbers, and I had distribution data available for the first 9 months. And of course, I looked at the move in the prices over the last financial year. So when you look at it, two of them have given you appreciation in the range of about 14 to 15%. But when you look at the distribution yield, and it's very important to note what amount of it is going to be tax free. So in one case, it was 83% tax free, in the other, it was 93%. But in another case, it was only 34% tax free, right? And I think this is a very, very important factor when you're considering a REIT, that what is the percentage that's going to be tax free? Because ideally, you would want to go in for a REIT where there's higher amount of the distribution is going to be tax free. On an average, what we found is that the post-tax return, taking everything into account, works out in the range of about 4 to 4.5%. So I don't think that that's a bad yield. I mean, I think people should have return expectation in the range of about 5% post-tax. And of course, you do have chances of capital appreciation. But if you are looking at it plainly from a regular income basis, I think it's a good return. Around 4.5 to 5% post-tax is not a bad return to actually get.
Yes, absolutely, Reed, and absolutely, Mrin. Totally agree to your point. Like 4 to 5% of the return is what the trend is showing for the investment in REITs. And thank you so much, Mrin, for joining us today on ET Now and highlighting for our viewers what exactly is REIT, how one should go about, and what are the benefits that one should be looking forward to. Thank you so much for your time. Okay, so that was the discussion on REITs where we talked to the experts. What are they? Because real estate is definitely buzzing in India, not just in India, but the world over. And if you're not going for a direct investment in real estate, REIT could be a really good option for you. But moving on, it's the increment time. And if you have received one of the big questions that arises, how should you spend your bonus or that extra pay? We spoke to Shweta Jain of Investography to help you get the solution on your windfall salary. Let's listen to this one.
So it is always the allure of higher return, right? While not taking on too much risk or extra risk. So it's really interesting that we don't want to take risk, but you want that higher return. So when we are looking at risk versus return, one of the things that we should look at is growth assets. So for example, equity is a growth asset, right? So anything that you can commit to for long term, which has risks, would be a growth asset. So when you're looking at equity, and even if you already have exposure, especially if you already have exposure, then you can look at, say, if you've been investing in large cap, you can look at mid and small cap as a category. So while you're not increasing the risk per se in the asset kind, you're increasing the risk by looking at smaller companies, for example. So that way you can increase your return also. But of course, your time horizon will also increase, but without compromising on the kind of asset you're investing in. This is something that you can look at. But for first-time investors, I would definitely recommend that you stick to large cap first. Also very important, we don't really have our asset allocation sorted out usually. What happens is we look at just the money that is available with us or that we've invested freely before looking at that in total. We forget about the PF money that has been invested or the insurance money that has been invested. So I would recommend that investors look at their portfolio in total and then see how much they're actually investing. For example, from your savings, you could be investing, say, 100% in your equity, right? But you may have just started that, say, last year. And your PF money, you could have been investing for, say, 10 years. So if you see comparatively, your equity money, while you feel that 100% of my money is going there, it may actually be a very small chunk. So you have to look at that in total and make sure that your asset allocation is right.